Timeline: Milestones in the yen's history. Reuters: The group of 7 words. On Monday, the yen's wide swings threatened financial stability. Funding speculation central banks might intervene to halt a rally in the currency driven by a Japanese exodus from emerging markets. The yen was the only currency mentioned in a brief G7 statement as it rallied to 13-year hike against the dollar, threatening Japanese export as the world's second-largest economy tumbles towards recession amid the worst global financial crisis in 8 years. Here are some milestones in the yen's history. 1871, the yen became Japan's currency as part of the Meiji Restoration, which marked the start of Japan's modernization and opening to the rest of the world. Japan adopted the gold standard. 1979, after World War II, the dollar's fixed rate is set at 360 yen via the Bretton Woods system, partly to help stabilize price in the Japanese economy. 1959, the dollar-yen exchange rate is liberalized and the margin of fluctuation is set at 0.5% on either side of its dollar parity. 1963, the margin of fluctuation is widened to 0.75%. 1971, United States abandons gold standard, bringing an to the Bretton Woods system of fixed exchange rates and forcing a replacement of world currencies. December 1971, under the Smithsonian Agreement, the dollar-yen exchange rate is set at 308 yen and is allowed to fluctuate in a wider band between 301.07 yen and 340.83 yen. 1973, Japan's monetary authorities decided to let the yen float freely against the dollar, and the yen appreciated as far as 263 to the dollar. 1978, the yen passes through 200 to the dollar for the first time, strengthening as far as 177. 1980 to 1985, the yen's appreciation held and partially reserves despite Japan's big trade surpluses. Higher interest rates in the United States prompt Japanese investors to put money in the dollar assets. 1985, the group of 5 industrial nations, the predecessor to the G7, signed the Plaza Accord in which they agree the dollar is overvalued and to weaken it. The yen climbs for its pre-accord level of around 240 to 211 in October and 200 in November, a 20% rise in just a few months. 1986, the U.S. currency fell further to around 190 yen in January, 167 yen in April, and 153 yen in August. 1987, in February, 6 of the G7 nations signed the Lailatul Accord, which aims to stabilize currencies and halt the dollar broad deadline. The dollar still falls from near 153 to 37 in April and 120 or 80 by the end of the year. 1988, on January 4, the dollar falls to a post-war low of 120 or 45 yen in Tokyo trade, a level that held as the low for more than 5 years. The Bank of Japan intervenes to buy dollar and sell yen that day on behalf of the Ministry of Finance. August 17, 1993, the dollar declines to a new post-war low of 100 or 40 yen in Tokyo. 21 June 1994, the dollar falls to the K100 yen level and touches a record post-war low of 99 or 85 yen in New York trade before finishing at 100 or 30 yen. April 19, 1995, the dollar hits a record post-war low at 79 or 75 yen after U.S.-Japanese trade frictions sparked heavy selling. By the end of the year, it is near 103 or 40. June 17, 1998, as the dollar stood above 144 yen, U.S. authorities joined the Bank of Japan to buy yen, spending $833 million. By August, the dollar rose to near 148 yen, partly due to yen carry trades in which investors borrow yen funds at Japan's near zero interest rates to buy high-yielding currencies. 1998, after the global financial market strains from the near collapse of hedge fund long-term capital management, carry trades are unwound quickly. In 1 week alone in October, the dollar tumbles from near 136 yen to a low around 111 or 50 yen. 1999, the yen strengthens further despite repeated intervention, reaching 102 in November 2001 following the September 11 attacks. Bank of Japan intervenes to sell yen for dollars. 203, the MUF begins massive intervention to halt the yen's rise against the dollar, partly to save Japan's exports as the economy remains stuck in its post-bubble slump and deflation. The MUF spends 20 or 4 trillion yen, $200 billion of the year, nearly all of it to buy dollar and sell yen. 204, the MUF spends 14 or 8 trillion yen, or $145 billion, intervening in the first quarter of the year, including 1 or 67 trillion yen buying dollar on January 9 alone. But the MUF ceased intervention in March and has never since risen. 2005, the yen reached a high of 101 or 67 yen in January but then starts to fall, hitting 121 or 40 in December. Yen carry trades and Japan's investors shifting funds into foreign assets drive the slide. June 2007, the dollar hits a floor of 1 or 2 year hike of 224 or 14 yen. July 2007, the yen's brute depreciation takes it to a 22-year low on a real effective exchange rate basis. Since January 2005, the yen has lost 20% of its value on a real basis. August 2007, strains in financial markets from the U.S. subprime mortgage crisis sparked an unwind of yen carry trades. The dollar falls from near 1,020 yen to 1,011 or 60 yen. The high-yielding Australian and New Zealand dollars tumble nearly 10%. March 13, 2008, the yen hits a 12-year high of 99 or 77. October 24, 2008, yen hits 30-year high of 90 or 87 versus the dollar, while setting an all-time high against the Australian dollar of 55 or 12, with the Aussie losing almost a third of its value in just a month on a massive unwind of carry trades. October 27, 2008, the yen soared to 13-year highs, prompted the G7 to issue statement to single out the yen in warning on currency market volatility. The yen has surged nearly 20% so far in October on a trade-based basis, more than twice as big as any month going back to 1970, including the carry trade collapse in October 1998 and the Plaza Accords to weaken in the dollar in 1985. Thank you.